Good morning, Excellencies, ladies and gentlemen. I'd like to begin by thanking the Department of Commerce and Secretary Penny Pritzker. Also, I'd like to thank the Bloomberg Foundation and Michael Bloomberg for organizing this important discussion on powering Africa. As we've heard again and again, Africa's had 2 decades of very strong economic growth, but the encouraging growth story will only continue if the continent tackles its problem of infrastructure. Now, our studies show that the poor state of infrastructure in sub-Saharan Africa, including electricity, water, roads, and ICT, cuts countries' economic growth by 2 percentage points every year. And it reduces business productivity by as much as 40%. These losses take an enormous human toll in addition to taking a toll on economic growth. We've heard a lot about the infrastructure gap. There's about $100 billion a year that's needed. Less than half of that is supplied by the governments. And we've also heard that of the 800 million people in sub-Saharan Africa, there's only about 80 gigawatts of installed capacity, a deficit of 100 gigawatts. And 600 million Africans, 10 million small and medium enterprises don't have access to energy, despite enormous potential for hydroelectric power, for geothermal, wind, and solar power. As Mr. Dangote said earlier, the 5.5% or so growth in Africa has been done without power. Just to give you a very specific example, I was recently in Burkina Faso, and President Compaoré told me, first of all, that they had been growing, and we knew this, they had been growing at about 6% a year, and the cost of energy was 75 cents a kilowatt hour. Here in Washington, D.C., we probably pay 10, 11, 12 cents a kilowatt hour. So what will we do? First of all, we think that the U.S. Power Africa initiative will play an extremely important role in achieving the goal of providing electricity for Africa. So today, I'm very pleased to announce that the World Bank Group, following President Obama's lead, will support Power Africa by committing $5 billion in direct financing, investment guarantees, in advisory services for project preparation in Power Africa's 6 initial partner countries. That's Ethiopia, Ghana, Kenya, Liberia, Nigeria, and Tanzania. The U.S. government and the World Bank Group are working now on specific tasks and milestones for projects that, if implemented, would achieve 1/4 of Power Africa's goal of generating 10,000 megawatts of new power in sub-Saharan Africa. But while our financial and technical support will help move these projects forward, what we know is that we need much, much more funding. Now, the World Bank is a 70-year-old institution. We just had our 70th birthday in July. And we have done wonderful work in many African countries. But we knew, and I knew soon after I arrived at the World Bank Group, that we were not structured in a way to have the kind of impact that we knew we could have in tackling problems like power in sub-Saharan Africa. So we've rearranged everything. We've changed just about everything at the World Bank Group. We've increased our financial capacity. We're now able to provide state-of-the-art solutions, not just data and analysis, but solutions from all over the world. We're now a global knowledge organization as opposed to being a regional or country-based knowledge organization in the past, but we have to step up. I think you heard on a previous panel, Jeff Immelt said very clearly, what we need are pretty straightforward things. And so we will step forward and much more aggressively provide the kind of risk capital that will be needed to get projects moving. Secondly, we will use our 70 years of experience to take the lead on project preparation of what we know are many, many bankable projects in Africa. For me, having now had the chance to travel many times to Africa, and specifically as the World Bank Group president, I can't help but think about my own life, which started in 1959 in South Korea. I was born in a country that recently had gone through a war. It was one of the poorest countries in the world with a GDP per capita at that time that was lower than Ghana's. And the economists at the World Bank stated that Korea was a basket case. Too Confucian, too uneducated, too agrarian to ever have any hope of developing. We have heard those same kind of pronouncements about Africa too many times. I think back just to 2000, when a small group of us began pointing to the problem of HIV in Africa, and we made the point that this is a problem that we can solve. This is a problem we can tackle. There were naysayers everywhere. It's impossible to treat HIV in Africa. Africa is going to have to wait for the next generation. But through the effort of people like George W. Bush, who launched the PEPFAR initiative, and many members of Congress here today who supported it, 10 million people in Africa are on treatment, and the treatment outcomes and the compliance is higher than in many cities in the United States. We should never, ever doubt the potential of Africa, not only to solve its problems, but to grow in a way that will boost up the entire world. You know, it was the developing countries during 2008 to 2013 that accounted for more than half of global growth. We at the World Bank Group believe in Africa. The next 5 panelists have all done things that show that they too believe in Africa. For the private sector representatives here today, I would just invite you, just as Donald Kaberuka just did, get to know us at the World Bank Group. We do political risk insurance. We do credit enhancement. We have direct equity investments. We have a private equity instrument called the Asset Management Corporation that will invest with you in Africa. The opportunities are enormous. Just imagine an investment in electricity in Burkina Faso that will not only provide you with very strong returns, but will reduce the price and increase the access to electricity for the people of Burkina Faso. We know we can do it. Together with all of you, we look forward to the next meeting of the United States government and African leaders when we can talk about the great things that we've accomplished for our companies and on behalf of the people of Africa. Thank you very much.
Ladies and gentlemen, please welcome to the stage founder and chairman Econet Wireless, Mr. Strive Masiyiwa. Chairman, President, and Chief Executive Officer, IBM, Mrs. Ginny Rometty. Chairman, Chief Executive Officer, and co-founder, Blackstone, Mr. Stephen A. Schwartzman. CEO and co-founder, Harith General Partners, Mr. Tshepo Mahloele. Chairman and Chief Executive Officer, the Coca-Cola Company, Mr. Muhtar Kent. And our moderator, Assistant to the President and National Security Advisor, the Honorable Susan Rice. Please.
Hello, everybody. Thank you so much for joining us. I want to join my colleagues in thanking the organizers of this event, in particular, the Department of Commerce and Secretary Penny Pritzker and Bloomberg Philanthropies, and in particular, Mike Bloomberg, for their extraordinary vision and collaboration to make this occasion as impactful as it is. I'm honored to be joined by such a distinguished panel to discuss Africa's infrastructure potential and Africa's infrastructure challenges. But before I do, I want to just ask you all to join me in thanking again Jim Kim and the World Bank Group for a really extraordinary announcement that he just made on behalf of the World Bank for Power Africa, the President's signature initiative to double access to power to Africa. And the commitment of $5 billion from the World Bank Group is an enormous contribution for which we are very grateful, and I know President Obama is personally very grateful. So please join me in thanking him. So broadly speaking, in the context of this panel, we want to explore the nature of Africa's infrastructure needs, the challenges that we face in terms of trying to enhance both the energy infrastructure, transportation infrastructure, information communications and technology infrastructure. And this panel is incredibly well suited to do so. We have CEOs, we have investors, we have those that have specialized in every aspect of the infrastructure challenge. And what I'd like to do most of all is invite you all to share in particular the challenges that you see in terms of bringing greater infrastructure to Africa so that Africa's development is facilitated and supported, where in particular you see the opportunity for policy to play a role in strengthening Africa's access and opportunities in the infrastructure realm, and where you see the risk. And I know each of you are well suited to elaborate from your own perspective on that. Steve, I wanted to start with you. You run you have a global base of investors. You have become very involved in Africa of late. And I really wanted to ask your perspective of where do you see the greatest challenge to improving and enhancing infrastructure in Africa? What role can the private sector best play? What role can African governments and Africa's partners play to increase the quality and the quantity of infrastructure?
I think the people on the first panel actually did a pretty good job at laying this out, whether it was Jeff Immelt or someone else, that we've been doing infrastructure for a while in Africa. We completed building a dam in Uganda, and it comprises now 40% of the electricity, lowered the price by about a third, and increased the GDP by about 60%. So the power of power is really very substantial. And from the perspective of sub-Saharan Africa, where 70% of the people don't have electricity. And for a lot of people in this audience, they understand that. For people who would normally be in the developed world, it's incomprehensible. And the continent's still growing at 5%. So if you imagined the $300 billion that was necessary to really electrify sub-Saharan Africa, it's a huge number, and it would make a huge difference. So I think anytime you have 5% growth anywhere in the world, you're going to attract private capital unless you try and stop it. And the returns should be there. But it's really the supply chain. It's about reliability of policy. It's about continuity in terms of policies from over time, because these projects aren't necessarily done within the lifespan of one administration. And if you invest the time and somebody else decides it doesn't want it, that's a risk. You also have the issues of rule of law, which is something that as investors, all of us need. If you don't have rule of law or security that you can't risk capital. And so there are a variety of things that governments can do which frankly are not difficult. You just need the will to do them, the support for new projects, and the probability that you get a significant uptake in your economic growth, the ability to increase employment, increase GDP per capita is quite high.
If you could, Steve, elaborate a bit, obviously predictability, long-term policy development and sticking to those policies is critically important. But which kinds of steps can governments best take in Africa that would lay the right policy foundation once it was long-term, adhered to over the long term? Or do you see these policies being nationally driven, or are there regional efforts that could be taken that would be particularly useful within sub-regions, whether it's SADC, the East African Community, ECOWAS?
I think regional things are much more difficult than national things. As we look at our own country, or otherwise, it's hard for people to get together and agree. It's tough enough in one country. So I like to do easy things. I find they're hard enough. And a country has to figure out what it wants to do. Is it prepared to buy power? What kind of price? Is it prepared to guarantee you a spread over your supply? What is the supply? Is it plentiful? Will somebody make sure that happens? There are all kinds of things you can do to make a project easier. And you know, it would be really useful if there was a pan-continental template of what people should do. The G20, for example, as you probably know, is thinking about that type of approach for a variety of different infrastructures, so that people who do things are going to look at the same type of criteria. Countries will know what is the preferred outcome on those criteria, so you don't have to have the same negotiation over and over and over. So that's part of the global agenda, and I think it would work really well for Africa if you had regional groups, something like in Western South America, which looks like it's going to work pretty well. That would be great. There are so many countries in Africa that it can't be an easy thing to harmonize everyone's policy. If you could, even better, but it's a tough objective.
Thank you. If I might, I'd like to go to Strive next. And your perspective, Strive, particularly looking at the industry that you've been most active in, communications, information technology, and give us a sense of how the opportunities there are evolving in Africa, and a sense of this question of whether you see the potential for regional collaboration and regional policies that can spur greater investment in infrastructure.
Well, thank you, Susan. This conference is a great vision realized for us. Thank you for organizing it and for starting this new chapter. You know, I have been active in building African infrastructure all my career, 30 years. I built bridges, I built roads, and I've been involved in the telecommunications sector since the private sector were first allowed in, back in the early 90s. And during that period, I have invested in and built telecommunications infrastructure in some 17 African countries, whether it is in the south or the east or the north, French-speaking, Portuguese-speaking. We've been there and we have people in all those countries. If you had asked us in 1994, when telecommunications penetration, the percentage of the population who had a telephone, was 0.07% on the African continent, whether it would be conceivable that 70% of the African people could have a phone in their hand. We would have been committed to an institution. The cost at that time would have been greater than the GDP of the continent in the eyes of many people. Today, the private sector has invested more than $100 billion so that 650 million Africans now have a cell phone. In fact, for those of us who are entrepreneurs in this sector, the communications component of this revolution is behind us. Yes, people are still building towers, but we've moved on. We're now into the digital connectivity. How do we build a digital infrastructure? For instance, our company has been laying fiber. We have laid fiber now in 15 African countries. We have a fiber system that began in Durban, building along the side of the road. And if you know your continent, as you know, Susan, we followed the road, went up north, crossed the river, the Limpopo into Zimbabwe, crossed the Zambezi into Zambia, digging along the side of the road, 5,000 men. And we are now on the border of Somalia. If it wasn't for Al-Shabaab, we would be in Mogadishu. So we are building infrastructure in those countries. Today, our focus is ensuring that these networks can now create an overlay where we can provide education, health, we can provide agriculture extension services to women farmers. This is the future, creating digital jobs for young people so that we can employ the young Africans, as well as providing health support and other things. That it is as much an infrastructure today as it is to build the original physical infrastructure that we were building. And perhaps I'll stop there.
Strive, if I might just ask you to elaborate, you have been a huge proponent of and investor in Africa's human capital, and particularly its young people. You've also been a great supporter of the Young African Leaders Initiative, which the President was proud to host last week during an extraordinary summit of our Washington Fellows. But your perspective as someone so deeply involved in the digital sphere as to how we can use both partnership between the United States and Africa and investment to promote skills development and skills transfer, which is a huge underlying objective of our partnership with Africa, and where the United States very much wants to take it. We want Africans, particularly the up-and-coming generations, to be extraordinarily competitive internationally and have the access to the skills and the education they need. How do you see the role of the private sector, and particularly information communications technology, in trying to support that?
Thank you. You know, we look at schools, and we look at the brick and mortar. Again, if we had to go out and build schools, we haven't got the resources today. We have to look beyond brick and mortar. The brick and mortar schools are an invention. We can use the technology we have today to provide education to children. The tools are already with us. We were talking earlier, and I know Jeannie will talk a little bit more about that, but the most important thing for us today that we've got to do is to educate, is to invest in our young people. As an earlier panelist said, 60% of Africa's population is between the age of 15 and 25. You know, we haven't got time to wait. So we have to use this infrastructure that we have, not only to get children into school. 50% of the world's children that are not in school are in Africa. We have to get them into school, but once we've got them into school, we have to deliver the quality education that will help industry employ them. But even then, it's not enough. We have to look at making them entrepreneurs to create the next generation of industries. So this is where I think President Obama's initiative is so powerful. But it's also important that we have young Americans heading the other way. As I have been saying on our part, and it's a commitment we have made, which I'm happy to announce here, we're happy to receive 20 young Americans every year coming the other way that will come and work in corporate Africa, so that when they return to work for Goldman Sachs and other industries, we'll have an alumni of business people for the next generation of Muhtar Kent. Thank you.
Well, Muhtar, if I might go to you. You personally, but Coca-Cola for many years has been a stalwart and pioneering investor in Africa. And you have developed enormous networks of partners, created vast numbers of jobs, and now are doing great work to help develop clean water. I'd like to ask you just to elaborate, based on Coca-Cola's experience, on both the infrastructure challenge, but also to share with us the partnership you have forged with the new alliance.
Thank you, Ambassador Rice. And I also want to start by complimenting President Obama and the U.S. administration for this wonderful initiative. I think this has been something in the waiting, and it's come now, and I think it's a great time. So wonderful to be here at this occasion. My company has been honored to be part of the African community since 1928. And today, if we fast forward, I think what we see is the youngest continent, an incredibly vibrant continent. And I've been saying 3 years ago that this decade, when it started, would be the decade of Africa. The untold decade of Africa is starting. Small increments of improvement in governance in Africa is yielding exponential results, as is infrastructure investments. And we see that. We see that as a company that operates proudly 147 factories and is one of the largest private employers on the continent, more than 80,000 direct employees, and indirectly almost 1 million employees through our infrastructure. And I think if you take, and today also I'm proud, back at the beginning of the decade, we announced investments of $12 billion in the decade we're in Africa, up from $5 billion the previous decade. And again, I'm very proud to announce that we're increasing that 12 billion to 17 billion now, in the middle of this, not even in the middle of the decade yet. So, and I'd like to look at infrastructure in Africa over 3 vectors. Vector number 1 is the basic infrastructure, the power, the telecommunications, the roads, the bridges, all of that infrastructure. That then allows business infrastructure, business investment and business infrastructure, the second vector, to come in. And now I think we're seeing that transitioning also into what I call social infrastructure, which is a third vector of what is best described as the golden triangle of business working with government and civil society, academia, in that golden triangle to create social infrastructure, to improve education, improve the entrepreneurial spirit, improve sanitation, improve water in Africa. A third of African communities still live without clean water today. So we have an initiative called RAIN, which is short for Replenish Africa Initiative, and we bring water so far proudly to 1,600 communities. I'm proud to say we work closely with IBM on that project. We bring sterile vaccine-grade water with partners, with the IFC, with other Bill and Melinda Gates Foundation, other partners, co-investors into small villages, small towns, provide connectivity, solar power, and this unit that we've developed works with, again, solar power, 1,000 liters of sterile water generated from any water, no matter how contaminated the water is, working on solar power. And we need to scale these up. We're looking for partners. We're inviting partners to come and join us. I've talked to Strive about it, and I think we need to continue to scale these big projects from where they are. Then we have another initiative, which is the last mile, which again, we work with the Bill and Melinda Gates Foundation to take HIV vaccines with our own infrastructure, because we can go the last mile with more than tens of thousands of vehicles and micro distributors in Africa, which, by the way, most are women entrepreneurs. So that's part of our 5 by 20, 5 million women to be empowered by 2020 initiative, which connects into the micro distribution network to take HIV vaccines to the last mile, to the villages. And we've increased distribution by 30% of HIV vaccines in just Tanzania alone through that initiative. And That's part of the commitment that we had with President Obama on World's AIDS Day 2+ years ago, to extradite women to child transmission of HIV by 2015, and we're on target. We will do that. So that's, again, really important initiative. Those are all the social infrastructure, the third vector, which I wanted to emphasize. And despite the gaps of basic infrastructure that Steve talked about, despite the gaps in business infrastructure, because there just is not sufficient foreign direct investment today in Africa. There needs to be more. And despite the fact that we still need to scale up all these great programs, I am extremely bullish about the future of Africa, the youngest billion and the most dynamic region in the world that I can see right now. Thank you.
Thank you. You were relatively modest in touting your commitment to increase another $5 billion of investment in Africa. And I just want to thank you and applaud Coca-Cola's leadership and its partnership with the New Alliance for Food Security and Nutrition, which is an effort that many in this room have joined the United States and some of our partners internationally in supporting. It is bringing opportunity and food security to people all over the continent, in particular to women and women farmers. If I might, Ginny, turn to you, and it would be very helpful, I think, for all of us to understand IBM's experience and story in Africa. Tell us a bit about the environment you found, the opportunities you found, and in particular, the innovation that you have brought to the concept of smart cities in Africa.
Well, like everyone here, and like Muhtar just said, very optimistic, not only about the present, but the future. And as Strive mentioned, you know, we've had much discussion about both the hard infrastructure and about things like oil and gas that we always speak of, but of equal importance is this digital infrastructure. And I'd even challenge everyone to think about not necessarily just hard resources as natural resources, but that for this continent, that information will be its next natural resource. But like natural resources, you have to refine it. So you have to do something with it. But if you can, its returns are endless in this case, unlike hard resources. So this is really, to me, the foundation for much of what we've been focused on. And like Muhtar's company, we've been there not quite as long, in 1937. But for many years, we were in 8 countries, and we've accelerated. We're in 24 countries today. And like many others here today, over the next 7 years, we'll be investing at least $2 billion across these countries as we continue to develop here. So I am very proud about that. And as you look at the development, as many people have said, I'd offer just maybe a slightly different twist on the lens of the opportunity. And that if you take a look, we've talked about urbanization, you mentioned smarter cities. When you look, if you're a business-to-business company, not just business-to-consumer, the opportunity is there's 52 cities over 1 million in population across the continent. And there are over 400 businesses already over $1 billion in size. So they look to partnerships. We all talked about the talent. I don't know why any company wouldn't want to be part of both growing and having that talent as a part of their company that will exceed China and India. And the third point I would mention, though, you know, Strive mentioned the mobile infrastructure. It is, as a percent of GDP, it is 3x that of developed countries. And it will, and this is, as this conference started, as Ashish said, I believe Africa will be the place where things will leapfrog and solutions will be created in Africa that will be brought to other parts of the world. And I think that's incredibly important in how you approach the continent in many countries. And to the question about smarter cities, I would say we've taken 2 approaches on this. One has been, if you look at urbanization and you want a smarter city, you have to build a blueprint for a city. We've now done 200 projects across 10 countries, and in many cases, you know, Strive, where you said to bring people from America there and vice versa, we've had 800 IBMers and from other companies as well join us on these projects, so you have 2-way mentoring. And that ranges from in Nairobi for traffic, in Accra for mobile payments, for government work. It could be in Zambia for work we're doing with the Ministry of Health. The projects flow a gamut. But the other side, when you think about urbanization and smarter cities, is the foundation industries have to be really strong. And so I also wanted to take this opportunity, and foundation to me is telco, banking, strong government services, and then obviously retail. These are the things as countries develop. Let me take the opportunity to announce that we also today had formed an engagement in a partnership with Fidelity Bank in Ghana, $100 million that we will together, a project we'll work on with them as they transform global standards and to do some innovation within and around Ghana. And I would thank, President Mahama of Ghana for creating that both rule of law and the climate for business, as well as Edward Affa, who is the founder and CEO, for sort of the vision about these companies. So we're very proud to announce that this deal with the Bank of Ghana today for almost $70 million. But together, I would just underscore out of all of that, the kind of work you can do in the cities, the opportunity that's there. I would just sort of latch on, if I could end on a point that Strive mentioned, which is about the skills in developing the youth. Because I do really commend President Obama and the team for the work on YALI, the work that's been done there. And it is a both public and private partnership. But I would say, one of my biggest learnings and my passion around Africa is it is not about money. It is about developing the capability that's there. And so all of our efforts, we've opened a research lab. We only have 12 in the world, true research in Nairobi. All of our education programs, we offered all of our software in the cloud free to every university. We are training 1,000 professors, 60 universities, so that the next wave of students, they are the agriculture worker of the future. They are the manufacturer of the future that will have to know the sciences and know IT. And then we've offered programs. We have one called Leading to Africa, which I think is an amazing thought. It is about 6,500 applicants of students, diaspora, who are from Africa, going to school in other countries in the world. And we've now put them through internships for 2 years, and as they graduate university, they will now go back and work, hopefully for us, or some of you, but they will go back and work across the continent. So there's Leading to Africa and Leading in Africa programs that are there. So I am just such a strong believer that the greatest contribution we can all make in a win-win fashion is to develop those skills.
Thank you so much. That's great. Tshepo, you've had a very distinguished and productive experience investing in all various different ways in Africa, but particularly in infrastructure. You've been a pioneering partner in Power Africa, for which we're very grateful. You've built airports, you've done everything. And it'd be very useful to hear your perspective on where the capital can come from, how we can attract more in the way of foreign direct investment in Africa's infrastructure, and what the United States' role optimally ought to be.
Thanks, Ambassador Rice. I think if, 6 years ago, if we tried to put into a room this distinguished type of people and be trying to talk about Africa, the conversation would be very different. Today we're talking about business, we're talking about returns, and I think it is great. So therefore, it can only tell you that, for coming next 6 years, you can imagine what that will mean for capital. And I think that's what, the manner in which we would like perhaps capital to sort of start looking at the continent of Africa in terms of, on a long-term basis, what it can be able to give from a return point of view, and also investing in your hard assets, like infrastructure, which contributes sort of like tangible results to GDPs, to well-being, because the truth is that the whole competitive of the continent is very dependent on improving that infrastructure, whether, social or economic infrastructure. But we see that. Initially, the challenge, most had was one of finding capital to be committed to the long-term development of the continent. And in what our initial sort of struggles were very much focused and, whereby we couldn't get, capital to commit to long-term funds. You're not going to build a road or a power project or an airport or a port, with money that must get in and out within 5-6 years out of an economy. So therefore, I think initially, through the support of very smart, capital, some of the pension funds on the continent, which were our initial investors, ensured that we could establish and start off with the first 15-year fund on the continent to exactly enable that type of, investment to be able to take place. And I think that thesis is proving itself, and just by the very fact that today we can sit here and talk about Africa in the sense that we're talking about today is very testament to the fact that this is happening. There is still a lot of capital needed to develop the continent's infrastructure. But I think, every sort of few years, the story gets better and better. And that capital, which came in earlier, is now realizing that that thesis has been proven and there are returns to be made. But there is still very much, a need. I mean, initially we had, 2 pension funds supporting, the fund, which was the Government Employees Pension Fund in South Africa and the pension fund in Ghana, SNIT. We're happy to say that, today you're getting pension funds in Botswana, looking at investing in these funds. We've seen very large, serious reform with pension funds in Nigeria starting to invest in the infrastructure there. So I think it all bodes very well for the continent. And those pension funds are not doing it, because they're just African, but they're also doing it for returns because, in as much as anything, they have pensioners for which they have to look after, in the future. So therefore, they have to do the right thing. So they're doing it for return, not only just because they're also African, but they're getting both benefits out of that.
Thank you very much. We have, yes, exactly. We have just a few minutes left, but I wanted to spend the time that remains on a theme that everybody has touched on in one form or fashion, which is Africa's human capital and what some might call soft infrastructure. Without that, everything else is secondary, and with that, Africa's potential is limitless. And each of you, in your own ways, have not only emphasized that, but invested in real terms to develop that human capital. I'd like to just invite your thoughts and comments on ways that the United States, both private and sector and government, might take our partnership to develop Africa's human capital to another level, and to hear from our friends and colleagues from Africa, what is our value added? How can we support Africa's development of its own human capital in an optimal way, and in particular, help in the creation of jobs for young people that will be skilled jobs for the future?
Thank you. Dr. Jim Kim used a very interesting expression there when he spoke of shared prosperity. Even as we talk of infrastructure like power, it's very important for us to always keep in mind that there are still millions of African children going to bed every night without a light, even to read. There are simple things we can do, such as providing solar lanterns so that children can read at night. There are simple things we can do right now, building mini-grids, because a lot of our villages will not receive the power from these big power stations. So to have a big power line go over your village, and because you built 5,000 megawatts for the city, when we can also look at how we can use solar power to build mini-grids so that children can have access to those simple things. These are things we can do today. We can remove tariffs on things like solar lanterns. There are so many countries which still have tariffs on something like a solar lantern. These are simple things, and I'd like to urge governments to strip such things away, because the private sector can do such things for you today. Education is the key. We've got to get kids into school. And to the extent that even the private sector, as we go in to these countries, we must bear in mind that that is a piece of our investment. It's not so much about your own workers, but what can you do to get kids into school, even if you don't need them as employees? Thank you.
Thank you. Ginny?
Yeah, I wanted to add that I think this is the opportunity of one of these ideas that would be a leapfrog, a grand challenge that could not only solve a big issue in Africa, but other parts of the world. Because to Strive's point, the size of and the number of students to be educated is so large. I think working together, this grand challenge of taking what you might call massive online open education, e-learning, to an entirely different level, joint public-private. We've started some work on this that's between, if you can understand a child's context, the way they learn, the behavior of their learning, you can really break through electronically with them on a scale that you could no chance have to do otherwise with teachers across a whole continent like that. And so this idea that we could have a great breakthrough on the grand challenge of e-learning coming out of Africa, I think is really quite real in the basis of a public-private number of different partnerships to advance that.
Thank you. Tshepo.
I think with regards to the youth unemployment issue is a global phenomenon. And there's a need with regards to, in terms of like, from an African point of view, in addressing that, looking at some of like, what sort of like other smart partnerships in terms of investment in social infrastructure, especially in terms of like education. What sort of like smart partnership with the private sector governments can get into to enable the growth within the education sector. But I think the new economy, investing in sort of like this, the digital sort of like age, that's what is needed, because the type of skills we have now, we're not sort of like geared up for them. But the need to be able to like be competitive, many years forward is going to need that type of realignment, like what type of, interventions we're putting in place.
Thank you. Muhtar.
One of the aspects is that I think we in business, we can help also raise the confidence of youth in Africa. I think that's a really, really important thing. If you looked 15, 20 years ago, Brand Africa wasn't generally associated with always positive things, war, strife, conflicts. Today, I think there's confidence coming to the youth in Brand Africa. And what is a brand? Brand is a promise well kept. A good brand is a promise well kept. And that promise is a vibrant future. And we, in our world of communication, we created a piece of communication that said 1 billion reasons to believe in Africa. And we basically ran that 60-second piece of communication across every nation in Africa. And it produced enormous results when we looked at how it connected with people. And you can actually go into YouTube and just write 1 billion reasons to believe in Africa, and you can see that actual 60-second, 90-second piece. And I think those are the kind of things that Africa needs more than, youth needs more than ever, to believe it in itself, and to believe that they can really make a difference, a positive difference in this world that we live in today, which I believe they will.
It's a great place to end. And I want to thank each of our panelists for participating and for adding their wisdom and insight. But more than that, I want to thank you for all you're doing with and for the United States-Africa partnership and for helping us take it to a new level, so that when we look back on this event 10 years from now, we'll see it as a true inflection point in our collaboration and our partnership based on mutual interest and mutual respect. So thank you all very, very much. Thank you. Thanks. Appreciate it.